Hello and welcome to Crux Investor. We caught up with Adam Horn today. He's CEO and chairman of Tomboll Mines. He explained their business plan. They're surrounded by one large company with relatively good grades. They see more of the same on their property. So could it be as simple as just do enough drilling to work out what you've got and make yourself an irritant to your next door neighbour? Couldn't be that simple, could it? Well, if you want our thoughts and opinions on the conversation, their plans, and indeed Adam, you can find that at cruxinvestor.com. And we'd love your feedback too, so give us a like, leave your thoughts below. And if you want to see precisely what we talked about today, do take a look in the description below. Adam, how are you, sir?
Thank you. I'm fine.
You're fine. Good.
Yeah.
Where are you? Let's start with that.
I'm in London and working from my office.
Fantastic.
My team here.
How long have you been back at the office? Is everyone?
Well, from March last year, I sort of came in 1 or 2 days a week and coming a bit more. We found no one got COVID amongst us. We've all been vaccinated. So we're just kicking on, and I think we're able to do a bit more from the office together. But we've all learned also to work away from it in the interim. So it's a combination of the two.
I'm hoping to avoid going back to London. I've kind of got quite used to rolling out of bed and pouring myself a coffee and getting to work 5 minutes later. It's a nice idea. Right. Well, we've not met before. We've not spoken. News story. We like a news story. So why don't you kick off, give us a 1 minute overview, and I'll pick it up from there with some questions. Okay.
Okay. Tomboll Mines went public in the middle of December, and of which we raised about $6.5 million. The company's operations are based in Canada and Ontario in a place called Geraldton, which is known as the Geraldton Gold Camp. And that's about 275 kilometers north on the Trans-Canada Highway from Thunder Bay. So it's in a very good setting where we have obviously the highway town of 4,000 people, airport. We even have a golf course that was built by the legacy miners. But itself, Tomboll was founded in 1935 by Tom and Bill Johnson, and with actually backing of Newmont. And it had two past mines that were in production within a region that had about 10 mines in production, which yielded between the 30s and 60s about 3 million ounces of gold. So that was really done with entrepreneurs, prospectors, and the gold price didn't facilitate the expansion of that from the 60s. But what happened was approximately about 2008, our neighbor, which has had various names, but was at that point Premier Gold, created the Greenstone property. Of that, the most important asset they had was called Hard Rock, which is right adjacent to us, and all the resource plunges onto us. So they, from 2008 to 2016, they did a lot of drilling and resource work, and they were able to prove about 6 million ounces. And that then evolved to Centerra buying 50% of them in 2016 for approximately 200 million Canadian, plus they committed 200 million capital to do further work. So given that investment and the caliber and expertise of people, that created a resource on Hard Rock adjacent to us of about 11.5 million ounces to date, of which 6 million ounces plunges is sort of 800 meters to 500 meters in depth. And that's measured, indicated, inferred. And then they've have an open pit resource that's about 5.5 million ounces proven and probable. So in December this year, the two owners of Hard Rock or Greenstone sold simultaneously to Equinox, who bought 50%, and Orion, who bought 50% from Centerra. Equinox has subsequently bought 10% additional, and that means they're sort of gung-ho to get going. They're already building the camps, and they're moving this from a resource to a mining operation. So Tombola ourself is really a donut hole within the whole Greenstone camp, of which Hard Rock, as I said, is to the east of us. Their resource starts about 5 kilometers from our border, which is the open pit, which goes from about 3 kilometers to 5 kilometers from our border. Then from the open pit to us is another 3 kilometers, of which they had some of their most memorable holes. I mean, on our border, they've drilled, when I say on our border, 150 meters to the east of our border, they drilled a hole called MM170, which has about a 20 meter width by about 19 grams per ton grade. So as a consequence, our family who owned, we've owned Tombill for over 40 years. And we bought it from Hudson Bay Mining and Smelting, of which it was part of a bundle of assets. So we didn't buy it as a pure play asset. We bought it as in a holdco, and we hadn't done any work on it until we really saw the wonderful work that Premier did on the property, and the gold price came into play. Plus, we were lacking in expertise, so we assembled a team that we'll go through later. But the one thing I do want to point out this stage, 3 of those team members were very senior executives with Hard Rock, the Premier Gold project, and that's Tim Schwome, who was in charge of exploration from 2008 to 2012. He really was. I mean, at that point in 2008, there was a zero resource, and he got it to 6 million ounces. Then Ben Cleland, who worked for him, took over his job from 2012 to 2016, and he's also a consultant with us. I mean, Tim is our technical advisor and really is involved day to day. And then Gordon Reed, who actually was the ex-COO of Centerra. We met him subsequently because he bought stock in Tombill Mines, because he had a real affinity for the property, because he was also on the board of Greenstone until they owned it in December. So he had a clear idea of how our properties really mesh together. I mean, if you do look at a map, we are a donut hole, and we would be landlocked if we didn't have the Trans-Canada Highway go right through the middle.
Right. Okay. Thanks for that that's fairly fulsome background. Should we? I think I can understand what the play is for you guys if you're a donut surrounded by.
Yeah, it's a closology play.
Right, it's a closology play, but the thing about closology plays is that you actually need to do some work. You can't just sit there and wait, right? So I get the assembling of people with more experience and pro-relevant experience to the property here, but why don't we might as well spell it out. I think we can all guess what the business plan is day one and what you're trying to achieve. You're trying to be a slight irritant at all stages and monetize that. Is that the shorthand?
Oh, I don't know the irritant, but I mean, I think you inferred what we're doing. I mean, we're really continuing the plan that they would have done, and we're using the same human resources that they did to do the asset. I mean, if you look at all the results, everything plunges east to west, and the grade gets higher as it gets deeper. But so the main part really is and the big zone that they have amongst 17 zones is the F zone. And we have right now, I mean, we raised our money in December. We're already in our drilling plan, and we've drilled about 6,000 meters. But and we're seeing, yes, the mineralization is very, very similar, and the zones are very similar to what our neighbor has seen. I mean, it just plunges. It's the same geological faults and so forth. But we are also doing a lot of work, which we couldn't do because of winter, on the surface, and that's up in the north, sort of the northeast, northwest of the property, and of which we had one past producing mine there, Tomora. We had another past producing mine a little bit down the road, 2 kilometers, which is about a 250-acre footprint, called Tombill Mines itself. But all our resources and capital are going to the main group, which is about 2,700 acres, and it's not, probably a little bit larger, not dissimilar footprint to the Hard Rock asset beside us. So it's a two-pronged attack of the deep drilling to identify the F zone and the other zones that make that up. F zone for our neighbor has yielded about a grade of 6 grams per ton. And then but they have a lot of other grades, but not as strong in the grade category. And so we're doing that, and then obviously we're doing we're doing about 10 holes of around 300 meters in the northwest part of the property around the Talmora property. We have come out with a press release where we saw some very high grade grab samples, and from 15 to 25 up to there. So that's what we're doing contemporaneously with the deep drilling.
So how do you play this? Because if you come out, you can stand in either man's shoes and look at it from their point of view. From your point of view, you say, well, they'll need this at some point, right? They're going to need this at some point, and for them, they've already got a lot to get on with. Unless they think that you are going to get this thing into production, they can wait, because no one's going to finance what you've got unless there's the economics stack up, right? So there's a sort of time, there's a kind of Mexican standoff potentially further down the line. So how far are you prepared to take this? How much more money will you raise, and how long will your shareholders be waiting?
Well, obviously it's varying on the markets, and we know we're in a wonderful market, and it's a big plus for everyone who's speaking to you over the last 2 years. But our objective is to prove out the resource, and then raise the capital. If bottom line is, if our average all-in cost is worthwhile, is attractive. I think our neighbor's about 600, but remember they've got more surface resources than we have at lower grade. But if that's attractive and the gold price is sustainable at these levels, we'll keep moving on. I guess if the options for us are to continue on, raise capital. I think we have the people to do it, and we'll have the resources and the team to do it. And I come from an investment banking background. I was at Morgan Stanley and Credit Suisse First Boston, and I worked in the capital markets. So if we have the team and the resource, we'll be able to do that. They are definitely focused on their open pit, but they have built a mill that demands 27,000 tons of ore a day, and that has to be fed. It's a big dragon. So perhaps they will do that beyond their open pit. Of course they will do that. Will we have the grades and the capability to feed that? I think we will, and they're going to need that, because their economics, it's very important for their average all-in cost to keep that, utilize that mill.
Yeah, no, I get that. I think it's a when, not if, for sure. Yeah. But at the same time, if I look at some of the questions being sent in by your shareholders, they're going, why aren't they accelerating and rushing into this? What where are the assay results? What is the plan? There's a expediency expectation from you, whereas I'm trying to work out from you guys is, how in your mind are you playing this thing? Because you've also got to be careful with the money that you've got, because if this is a longer term play, in the sense that you're not necessarily in control unless you can show that the economics allow you to stand on your own 2 feet. You've got to be sort of clear with what type of shareholders you think will be attracted to this. Because if you get the kind of I want a quick return group, that could cause you a lot of angst, I suspect.
Well, yes. I think that's more in the retail sector. We have currently out of our shareholder base, about 10%. You have to remember that our family owns 51%, which means we're locked up for 3 years. We don't mind. We've been locked up for 40 years already. And we have other sources of income and capital. Then we have another 10% of insiders that are under the same terms as us. Plus we have, then we have 6% with Crescat, who came in after we went public. So they see the story well, and then another 20%. And institutional bigger names in both from Australia and Canada. So I think we have a solid shareholder base and ones that wants to stay, and we have locked up. But your question's a good one. Along with the gold price, we have to deliver results, but we have to do it on a measured basis. And I think we will be coming out with some information on the drilling within the next month. And we are, as I did mention to you earlier, we are seeing mineralization that is the same as our neighbor. I mean, at the bottom line, there's a border there. That doesn't change things between the two. Although what can change is the strike and the fault. We're not saying it's perfect, but the mineralization is pretty similar at the border and within a few hundred meters. So our plan, even to answer, we have raised capital to drill 16,000 meters. We've drilled 7,000 meters to date, as we've announced, plus do our surface program that I mentioned earlier. At the end of that program, we will have about just north of $3 million still in our account. And our objective is phase 2 is to go along the strike. So we're drilling up to from our border to the 500 meters to that strike. Then we want to do another 2,100 meters from there. So it'll be 2.6 kilometer strike in total. The drilling program, we have a main hole every 100 meters and then 2 daughter holes that branch off that. It's done through a wedging program, which was the same as was done on the neighboring.
Okay, I mean, you kind of effectively, the Equinox outsourced drill team, because you're going to need to answer the questions
exploration
that they
team.
want. Exploration team,
Yeah.
Right.
Yeah.
So because you're going to have to answer the questions which they would be asking, not necessarily the questions which may drive your economics. You know what I mean? Because the monetization is different there.
Yes, currently it's very different because I'm sure at one point they thought the best route would be to show the resource and divest, and then they chose the operational model, and it's gone through iterations of ownership to get there. I think it probably, in retrospect, should have happened a lot quicker, but the 50-50 dynamic and what really was an issue of how to allocate one's own capital, they decided that it had to go under new ownership to move forward, and that they went through various lawsuits and so forth. So we're confronting the same issues, and we just have to move properly with the right capital and the right human resources to take it to the next step. But we're not going to stall ourselves and say, oh, here's a resource, and then we're going to do nothing. I mean, subject to gold price, we'll obviously move forward.
So, and how do you look at this in terms of the return? Your family's had it 40 years, right? So you're in no rush, right? But
we're in a rush now. We weren't in a rush then, but once capital has been committed by our partners, we now have a duty of care to do the best we can for ourselves and themselves.
So what does that return profile look like? Because if you went and had a conversation with Equinox at the end of this year, they'll have a little bit more information. They'll offer you an amount, which derisory, no doubt, amount. But whereas if you do go through the process of raising money yourselves, go through the exploration process, and maybe some kind of study component to it too, in the next couple of years, it'll be worth a lot more money. But it's another 2.5 years away. So
you say that. I think I think if we have drill results that are equivalent to our neighbor, and we're a $30 million company, and the transaction that was done in December valued our neighbor at 800 million Canadian, 600 US. I think it was 225 US plus a 75 contingency. So we're trading at 30 million. I think there is some upside based on drill results. I mean, we have to finish the job and so forth, but there will be some accretion, and there are investors out there who appreciate that and would applaud that. So I think the returns could be quite high if we demonstrate a resource. If we demonstrate the trend line is continuing from what they were achieving.
Yeah, I meant derisory, as in that would be your view of the first offer, I suspect.
I appreciate that point. I appreciate that point. I know how the world works, but we have to get a resource that's quite big enough that someone else can put their own mill in and so forth, and the economics are appealing on on a present value basis.
Okay, so I think this story is quite simple then.
Yes.
Unlike most others, you've got the end game already in your sights, and you've just got to go and actually, to some of the questions being sent in, it's like, what's the delay on these assays? Are we going to be able to, when will we see the balance of those, and how much more drilling by the end of the year? I mean, that's the...
Yeah, I think, as I said earlier, we'll have something out in the next month on the assays.
Meaning that's all 3,000 meters, or what was it, 3,000?
We've drilled to date 7,000.
7,000.
We're drilling up to 16,000. So yes, over the 7,000 to date, we'll have information out.
Okay, and apparently you've changed driller recently, drill firms.
Yeah, we went from M3 to Rodrin. I don't want to get into the reasons of M3, but it's the right thing to do for us. Rodman's a bigger player. M3 had done most of the drilling for our neighbor recently. I mean, they've used other firms before, but in recent history they were doing a lot. They were local, but we've had to change, and we had issues we had to sort of deal with, and we've dealt with them.
Okay. Well, look, I guess, Adam, it's stay in touch. Let us know when the drill results start coming through. As you say, if it is just replicating your neighbour's types of grades, that's very, very encouraging. But it's as simple as that, just more drilling?
It's more drilling and more surface work, because surface is cheaper, and we're seeing. I don't want to toot our horns and so forth, but we have seen things very good. Numbers come out of the grabbing the resource and sending that to the lab. So we will do a lot more work. There's a lot of mineralization there, and so it will be a combination of the two. I think originally we were just focusing on the zone, but now we've added.
Okay, great. Well, look, stay in touch. Let us know how you get on. We'll speak.
Well, thank you so much for your time. Appreciate it.